right, welcome to class 2. Warren Alcon back again here to help you get familiar with the basics of momentum, volume, trends, which all influence what is known as price action. So let's jump right in. In this section, we're going to go over 5 factors I take into consideration when analyzing market movements: trends, momentum, volume, and price action, as well as a basic understanding of supply and demand theory. So let's get comfortable with market movements, and after the video, we'll get you assigned some exercises that'll help you get more confident. First off, trends. Trends coincide with market momentum, moving up and down with the herd mentality. When you enter a trade with an upward moving trend, it's called taking a long position. Everything's moving up, okay? And when you enter a trade with a downward position or downward trend, this is actually called taking a short position. So we can generally confirm an upward trend by seeing higher highs and higher lows. And the reverse with a downtrend, we're going to see lower highs and lower lows, pushing us down. So within these trends, you need to keep an eye out for any signals that could possibly indicate a trend reversal. So for now, always be sure to trade with the trend. Now next we have momentum. Momentum reflects the rate of an asset's success or decline. It can pretty much be seen as a reflection of market sentiment and how people are feeling about the asset within a specified period of time. And because of this, we can take advantage of the herd mentality to navigate in and out of positions before momentum dies out. We can use trading indicators such as the MACD, the RSI, and the stochastic RSI to gauge movements in the market momentum. They can also assist us to validate our price trend predictions. We'll be going over these indicators one at a time in upcoming classes. The next focus is volume, which is the total number of shares traded within a particular time frame. Understanding volume can assist traders with confirming the existence of a trend, a new trend, old trend, and trend momentum. It's important to remember that volume is needed to push through what is called support and resistance levels, which will be discussed in another class very soon. The first indicator you're probably going to see is the volume bar. It's what TradingView starts you off with. If you don't have it, let's load it up for you. All right, you're going to go up to Indicators and just type in volume. And there it is right there. Put a star on it to add it to your favorites, and then just click on it. Exit out. Wonderful. This indicator shows the trading volume per candlestick within a specified time frame. The color of the bar will match who is in control. When looking at volume bars, I follow a few simple guidelines that could possibly predict any price action movement. When we have high volume with high price action, that means the bulls are in control. If you're going to see low volume but with higher price action, that means we're on thin ice and there's a possible reversal happening. Now, if you have high volume with low price action, that means the bears are in control. And then if you have low volume with low price action, that means you're going to have some weak sellers in the market and a possible reversal breakout is coming. Other indicators used to measure volume are the money flow index, the accumulation distribution line, and the volume weighted average price, which you can actually see here a little easier in the 1 hour time frame. These indicators are going to be covered later on in an advanced trading course. Next up, we have price action. Price action is the investor crowd making decisions that manifest in the market in real time. So, what factors go into price action and what decisions should we make to navigate charts accurately? Well, that's what the Uncrypted Crypto Trading course is going to teach you. Initial higher time frame assessment, current 6-week uptrend in Bitcoin right now. We're going to define our support and resistance levels on the weekly time frame. We're going to go down to the daily and make sure that we have our support and our resistance lines dialed in. Into the intraday, support, resistance levels dialed in. We just saw a breakout. We're just really confirming our trend direction, reversal, consolidation. We're going to check for divergence, momentum checks. We're using the RSI here. We are not getting any divergence yet from peak to peak. We are actually seeing a confirmation of volume. Are we seeing any long wicks, shrinking candles coming up to these areas? Any pullbacks, corrections, any chart patterns that are visible? We're going to go down into possibly even the 1 hour and see how these trend lines are moving. Price is moving above our moving averages, our trend lines. We had a breakout here, a pullback, and then another breakout session right here. We're above this area of resistance. Now we're gonna have to go into the 5-minute time frame because this could be a false breakout. What's going on? We had some bulls and bears just fighting it out over here. We had a little bit of a bounce back, and just really recently we're starting to come up on the uprise. We're gonna keep a really tight watch on this to see if there's any chance of taking a short position, because in my opinion it's a little too late to really kind of jump on and have a late long entry. So we're also going to look at planning out our entry and exit events, our trade execution. All of these steps and more are just how we navigate price action. And to slow down for a second, that was just a lot, but this is what the course is going to be about. And just real quick piece of thought, at our level, we're what's called the retail market. We're single investors, and we as an individual can't influence price action within the market. It's the whales, the big money institutions that make the waves that we have to react to. Just remember, all of this that you see on a chart, it's just based off of a herd mentality, and we just ride the ups and downs. Okay. And finally, we have supply and demand. We're sometimes seen as synonymous with resistance, support, distribution, accumulation, overbought, and oversold areas. Supply and demand represents the psychology of market sentiment, while support and resistance is the result of the market movement, which is then visually represented on a chart. These areas are important because it's where the big money looks to enter and exit trades on very large scales, especially when you get into the monthly and the weekly time frames for these multi-billionaires. When the price drops to a desired level, especially on the monthly and weekly time frames, when the price drops to a desirable level, they will come in and accumulate large holdings, and thusly when price rises, they're going to sell off and distribute their holdings. Now, in a synergistic way, two actions can happen at the same time within the supply and demand zones. When we close out a long position, we can also open a trade setup to take a short position, and vice versa. When we close out our short position, we can set up a long trade entry. Then, as the cycle continues, we are constantly in an accumulation and distribution position. That's what this introductory course is all about, getting you to the point where you can volley price action comfortably. We're pretty much wrapping it up. It's really kind of a quick class, but please, before we move on, hit the subscribe, like, and even share buttons to help support the channel. Okay, with all that said, let's get you some homework. So in TradingView, I'll show you how to take notes, but on your top 10 or your top 12, document what direction the trend is going. Make sure that you're right now just on the weekly time frame. No need to do any of this other stuff, okay? And real quick, this is how you're gonna take notes in TradingView. Go to the left-hand side taskbar, hit the text icon, and just click anywhere on the field. And you can grab this box and move it around, and you can just type in your text. And you can say whatever you want. And we can say, confirmed 6-week uptrend. Easy. You can change the font size, you can change the color, you can make it bold, italic. You can add a background to it if you want. You can add a border to it if you want. You can wrap the text if you want. So have fun with it. Hit OK. And then from here, you can just move it around. So that's that simple. Look at the volume bars and see if volume is complementing price action. Is there anything that doesn't match up? Refer to the volume shortcuts I mentioned earlier. High volume with high price action, the bulls are in control. Low volume with higher price action means weak buyers are entering the market and we're on thin ice and a possible reversal is close. High volume with low price action, that means the bears are in control. And if you have low volume, low price action, that means you have a lot of weak sellers leaving the market and there could be a possible breakout coming up. Hopefully by now you should have a basic grasp of what goes into market movements. Each of the topics covered today can easily be a rabbit hole of information on their own, but I highly suggest that during your trading career, you become very familiar with each of these topics. You can never have too much knowledge. See you in the next episode.